All right, today we're diving into the world of investing with a simple beginner's guide. Now, if you've always thought that building wealth was just for people in fancy suits or those with a ton of cash already, you're going to want to stick around. We're about to change how you see things.
So be honest, when you hear the word investing, what's the first thing that pops into your head? For a lot of us, right, it's this crazy image of traders on a stock floor or some financial genius with a massive portfolio. But what if that whole picture is just wrong?
I mean, what if you could just skip all of that noise and start building real, actual wealth for your future, like right now, with what you've already got?
Yep, you see that right. The truth is, you absolutely do not need to be rich to start investing. You can literally kickstart your entire journey with just $100.
So let's get right into the biggest question. Why start now? I mean, really? Well, it turns out that even a tiny beginning has some seriously huge power behind it. And it all boils down to one incredible little concept.
People say it's the most powerful force in the universe, and they're not really kidding. It's called compound interest. And put simply, it's just your money making its own money. See, you earn returns on what you put in, but then you start earning returns on those returns. It's a total snowball effect for your bank account. And check this out. This chart shows you exactly how insane it is. If you start with just $100 and you add $50 a month, look what happens. After 10 years, you're already at almost $9,000. Pretty cool, right? But the real magic happens between year 10 and year 20, when it skyrockets to over $50,000. That massive leap, that's the power of compounding kicking into high gear. So here's the most important takeaway from all of this. Your biggest advantage as an investor isn't some secret stock pick or trying to guess what the market's going to do next. It's time. Just getting your money into the market and letting it do its thing is so much more powerful than trying to jump in and out at the perfect moments. Okay, so we get it. Starting now is key. But what on earth do you actually invest in? Well, for beginners, the whole goal isn't to be fancy. It's just to get started. So let's talk about keeping it simple and smart. The absolute #1 golden rule you need to know is diversification. You've heard the saying a million times, don't put all your eggs in one basket, right? Because if you drop that basket, you've lost everything. Well, investing works the exact same way. So as a beginner, you've really got two main paths. On one hand, you could buy individual stocks. That means you're buying a piece of just one company. It's higher risk because if that one company hits a rough patch, so does your money. Or there's the other option. Index funds, which you'll also hear called ETFs. This is like buying a tiny little piece of a whole bunch of companies, hundreds even, all at once. Boom, instant diversification and way lower risk. So an index fund is basically just a big collection of stocks that's designed to copy a market index, like the famous S&P 500. That's just a list of the 500 biggest companies in the US. So by buying just one share of an S&P 500 index fund, you instantly own a tiny piece of all 500 of them. It is, by far, the easiest shortcut to being diversified. Now, you might be thinking, hold on, a single share of some of those big companies costs hundreds, even thousands of dollars, and you are totally right. But that's where this brilliant little thing called fractional shares comes in. It's exactly what it sounds like, a small piece of one share. This technology is the key that unlocks everything, because it lets you invest in those huge, expensive companies with just a few dollars. Okay, so we know why we should start and we know what to buy. The next logical question is, where do you actually do all this? Let's talk about picking the right platform to get your journey started. For any beginner, there are a few things that are totally non-negotiable. You want a platform, it's called a brokerage, with 0 account minimums, so you can start with whatever you have. It absolutely needs to have 0 trading commissions, so you're not wasting money on fees. Crucially, it has to offer fractional shares. And honestly, a really easy-to-use mobile app makes the whole thing so much less scary. And to make it even easier, here are 3 fantastic platforms that check all those boxes. You've got Fidelity, which is a great all-around choice that can really grow with you. There's Robinhood, which is probably famous for having the absolute simplest, most intuitive mobile app out there. And then there's Charles Schwab, another low-cost giant with tons of features. And look, all of them have a $0 account minimum. Whew, we've covered a lot of ground. So let's pull all this information together into one simple winning strategy. Think of this as your personal 3-step launchpad to get started, like today. It honestly is this straightforward. Step 1, do a tiny bit of research and just pick a low-cost S&P 500 index fund. You'll see them called by their ticker symbols like VOO or IVV. Step 2, just decide on one of those beginner-friendly brokers we just looked at. And step 3, open your account and buy your very first fractional share. You could literally have this done in the next 15 minutes. And as you go on from here, just keep these simple rules in your back pocket. Invest consistently, even if it's a small amount. Just set it and forget it. Diversify, which, remember, an index fund does for you automatically. And the most important one, start now. The best time to start is always today.
You know, there's that old saying that the best time to plant a tree was 20 years ago, but the second best time is right now. And it's the exact same for your financial future. So really, the only question left to ask is, what's your first step going to be?